Hi guys, it's Ian Coleman and this is your weekly market wrap-up video. It is Friday the 28th of March 2025 and it's just coming up to 1:30 in the afternoon in the UK. Now we've just had quite an important data release. It's the PCE data from the United States. It's core personal consumption expenditure, easy for me to say on a Friday afternoon. It's come in slightly higher than expected. The reason why this is an important data release is that it is the Fed's preferred gauge of inflation. Now we're expecting a print of 2.7% year on year. That's coming at 2.8%. We're expecting a print of 0.3% month on month, and that's coming at 0.4%. So what has happened is that we have seen a mild decline up to now within the DXY, which is the dollar index, and stocks have also moved gently to the downside. So what I want to do in this video, I want to concentrate on the majors. We're actually going to break down one product. Last week it was the NASDAQ. This week it's going to be the US dollar against the Japanese yen. We're going to talk about that in depth. We're going to talk about the dollar related products, cycle analysis and support and resistance, and where I believe these asset classes are going to move to over the next week. So we're going to start with the dollar index. Just to explain what we've got here on the charts, bottom right hand corner is the hourly chart, center bottom is monthly, then we're moving around weekly, daily, 8 hour and 4 hour. I do look at shorter time frames or intraday time frames for triggers, but for analysis I stick to what I call big picture time frames. So the most important chart here at the moment is this chart. So this is DXY, it's the daily chart. What we are building is a cipher pattern, and this is what's known as a bat formation. So just going to write that on here. So we're currently moving lower within this CD leg. Now it is a bullish pattern, but it's only a bullish pattern when it completes. Okay, Elliott Wave analysis would also suggest that we're in an impulsive move to the downside. So this being wave 1, just to mirror it on the chart, wave 2, wave 3, wave 4, possibly just completing after this PCE data, and then moving lower to complete the 5th and final leg around about 101 the figure. Now we're also looking at cycle analysis, so what normally will happen is that we'll see 3 cycles to complete a corrective move. Okay, this was the impulsive move. Believe it or not, all this price action all the way to the downside is actually corrective. So the long term or the medium term bias is still for a move lower, possibly into the middle of April. Let's go to the shorter time frame. This is quite important. What I should explain is also what the lines are on the chart. So the dashed black lines are bespoke support and resistance levels. Once they're broken, or once support is broken, it then becomes resistance and vice versa. The red lines are what I call dominating candles. So I use DMARC indicators, and these are dominating candles in different time frames. And again, what happens is what was support becomes resistance, and what was resistance becomes support. So they're quite pivotal in the way that they act with regards to price. As I said previously, the main focus for the dollar index, I believe, is around about 101 the figure. We've got this corrective channel formation. Okay, we've been consolidating really around the resistance and support level around about 103.77. What we have what can possibly happen now, is that we break this channel formation to the downside. Projection analysis would suggest that we stall around about 103.10 and then get a move back to retest either the breakout of the channel formation or these two levels here. So what I like is when we see a confluence area, so 103.77, 103.87 would then become a confluence area for resistance, and then basically what I'll be looking for is to sell into the completion of wave 2 to then take the impulsive move to the downside. Why do I like to do that? Well, the reason why I like to do that is because I know where I can place my entry level, I know where I can place my target level, and I know where I can place my stop loss, which will be above the previous swing high. So it immediately gives me a solid risk reward factor. If we just overlay some oscillators or some technical drawing tools here, we can also see that this is a market structure break, that the move down to what can potentially be wave 1 is then a demand zone. Break back to the upside, this will then become supply, and then we hopefully move lower. So at the moment, with regards to dollar products, I am, apart from dollar yen, which we're going to talk about in a minute, I am sort of sat on my hands. Okay, I'm waiting for this to develop. Why don't I sell it at current price? Because I haven't got the wave structure, and if I sell it at current price, I'm going to be selling it around about the same level on a retest in this wave 2. So that's the dollar index. So just to reiterate what we've talked about there, the long-term picture is to the downside for now, up until probably around about the middle of April. But I'm expecting short-term volatility, looking to sell into rallies into next week. Remember, we've got non-farm payroll next Friday. That's going to be a major event as far as the US dollar is concerned. So let's go to dollar products. The only dollar product that really doesn't marry or sink into this analysis is dollar CAD. So we're just going to skip through that one at the moment, but we'll talk about all the other dollar majors, and we're just really going to look at higher time frames, the daily chart basically. So let's get to euro against the US dollar. A mirror image basically of DXY. You've got to remember that the dollar index is made up of, I think it's 59% of it is the euro dollar. So most of the time what we see in DXY, we'll see the opposite in the euro against the US dollar. So what I'm seeing here, again, 3 cycles. We're still in this bullish cycle. A back completes around about 1.1105. I believe we're currently within the fourth wave, fourth corrective wave of a bullish Elliott Wave count. My prime support level is actually 107.12, 107.02. If I break, or I don't break, but if euro dollar breaks, 108.30, then what was resistance then becomes support and gives a trade opportunity or a counter trade opportunity to the upside. Sterling dollar, again, we're looking at this free cycle analysis. We've seen an impulsive move to the upside. Prime support is actually all the way down here at 127.28. I don't think we're going to get there. I've got the pivot at 1.2966. It's held numerous times this week. If it breaks, it then becomes support, and the target level will be around about 1.3210 for the completion of this pattern, and then to expect a move to the downside. Dollar Swiss, one of my favourite pairs actually. I think it gets overlooked. It may be because I was actually a Swiss broker in London back in the day, so it's got a bit of my heart already in it, but it is a dollar major that gets overlooked a lot of the time. Not a great deal to say about this apart from the cycle. So again, we're moving lower within a bearish cycle. If we squint, we could say, yes, this is an Elliott Wave count, so wave 1, wave 2, by 3, consolidating in 4. We haven't got that upward consolidation, we've got a sideways channel. Wyckoff analysts or traders would call this an accumulation zone, and what they would expect is a break to the downside. Let's just put that on actually, what we're talking about it. So this would be a Wyckoff accumulation zone, and then what has a tendency to happen is we break to the downside and then take out all the weak shorts and then move higher. So at the moment, ending wedge pattern has an eventual bias to break to the upside. I think we will surpass this level. Really, if you want to be dip buying in dollar Swiss, then you want to be looking for DXY to complete that back formation. We have got a previous resistance level from the 15th of August at 87.49. What was resistance now becomes support. I think that will break. I think we'll get down to this 61.8% pullback level, which is located at 86.90. Again, timing is going to be essential with regards to any dollar setups around about the middle of April. Dollar yen is the one that I like at the moment. I'm going to go to a short-term chart first. And I've been trying to get into this. I considered fading a move. 151.22, 151.31 and 151.41 was my sort of levels of entry. We've got a previous swing high. Basically that's the 151.31 high. It's below TDST. If you look at DMARC indicators, that is a relevant level. It's basically where the swing starts, and a lot of DMARC traders, and by the way, DMARC is used by institutions, so it does have quite, as far as I'm concerned, it has weight in the market. As long as it stays below this TDST, which is Tom DeMarc. I've lost on the ST. I'll have to look that up. But it's a resistance zone. Then the bias remains bearish. Okay. What I might need to do, I might need to wait until we break support and then try and get in at a lower level, because it hasn't actually hit my resistance as yet. Big picture analysis. So let's get back to this. So the big picture analysis is for this third cycle. So the cycle starts here, 1, 2, 3. We've got 5 waves up, Elliott Wave. We should see 3 waves down. Again, looking for that to complete around about the middle of April. Aussie dollar, not a pair to go close at the moment. What we have, I believe, is a confliction with what normally happens within the US dollar and also stock indices. And what we're seeing at the moment is a move higher in stock indices. That will allow Aussie dollar to bounce higher because it is one of the risk products. But we're seeing really choppy price action, and I think probably what's going to happen is we're going to get chopped around even more as this currency pair grinds higher. Again, we're looking at free cycle analysis, but it's sort of out of skew, if you like, to a certain extent. This looks to me like an ending wedge pattern. I prefer to see them at the top of the trend, not in the middle of a trend. However, we do have support at 162.70, 162.55, and we've got resistance at 0.6480. What I don't like about it is I like these levels to line up with these levels. Okay, so there's no real sort of confluence, there's no real defined pattern, there's no real completion. You know, okay, we could say that the trend line would be the completion of the wedge formation, but actually the completion of the wedge formation is when it breaks the base, and then your risk reward is just skewed all over the place. So even though I'm mildly bullish, because I believe the dollar's going to move to the downside, I think we're going to see some volatility in Aussie dollar against the US dollar. Gold, we just keep tracking higher. Just purely on the dollar index, could we get up to this level? This is a 361.8% extension. It's common in commodities, but it's more common in oil, copper, platinum than gold. But it is up here at 3,222. We've pushed quite aggressively past the 261.8% extension level. This could be inside waves. We could look at 1, 2, 3, 4, moving higher in the fifth wave. It's not a product that I trade, to be perfectly honest, but I know it's popular. Don't break the trend, not until you've got a good indication that the trend is over, and I don't think that's the case at the moment. So last product, just to talk about, where are we? NASDAQ. Still like this cycle. I know it's getting shaken up a little bit, but we've had to sort of not reanalyze, but we've had to go down to sort of shorter time frames. I've got this big thing here saying risk on. The weekly chart is still in sync, so we hit support, moved higher. The medium term bias is lower. Okay, we've got this ending wedge pattern. Over the medium term, we're looking for a move down towards this level, which is 14,060. We've got a pivot here at 17,250. We've got resistance up here located at 20,628, and then we've got reverse trendline resistance located at 20,973. The reason why I said we need to go to shorter time frames is because it didn't move. Well, it did move aggressively higher, but then we've seen this correction to the downside. We've closed this gap. That was a tariff gap, if you like, and we saw a decent move higher. This is a Gartley formation, so this offers, as far as I'm concerned, this offers a dip buying opportunity. We've got some support located at 19,451. As long as it stays above the TDST, which is located at 19,415, then there's scope to move higher within this CD leg. The best way, just to finish on this note, the best way to play cipher patterns, so they're made up of fib levels, is to either trade the CD leg with a defined stop, either the break of the formation, so if it moves below here, the formation is broke, or the safest way to trade a cipher pattern is actually on the completion and not the CD leg to the upside. Okay, so just to highlight what we've talked about in this video, the dollar, we're bearish. We will look, or I will be looking for a retracement retest if we get that channel breakout on the 4-hour chart. Syncs in quite well with cycle analysis and also chart patterns on dollar yen, dollar Swiss, sterling dollar, euro dollar, Aussie dollar, New Zealand dollar. I'd have a tendency to pass. Okay, all the best. Good luck with your trading next week, and I'll be back soon with more video analysis. Many thanks.